Good morning, everybody. How are we all feeling today? A little bit dusty or okay? Okay, so there's somebody missing. Good morning. So, good morning, everybody. I'm Robert Waugh. I'm the Chief Technology Officer at CloudTech Group. And also I'm the CEO of Ubiquity, our stablecoin business. And today we're going to be talking about the Odyssey of money. And we're going to talk about, what money means to each of our panelists. But really what you want to hear is, you want to hear from our panelists and why they, I think, have a relevant opinion about money. And so I'll let them introduce themselves. So Lisa, would you like to tell us your name and where you're from? Oh, hold on. Try now.
Testing. Hey everyone, I'm Lisa Wade. I'm the chair of DECA, and I guess my street cred in money was a little project called Project Atom with the Reserve Bank of Australia and the Central Bank Digital Currency, and a little bit of stablecoin work at NAB.
And next up, Ash.
Ash Cooper, co-founder of an asset management company called Jelly C. Worked in traditional finance for a long time, so came to it from seeing the inefficiencies of emerging markets and governments controlling money.
Thank you. Lucky last, Alan.
Alan Burt, chairman of the Red Belly Network. I'm being tasked with working with Professor Vincent Grimoli here in spinning out his work from the University of Sydney to build a very scalable, secure blockchain for financial services.
So, before I sat down, I thought I would give the definition of money. Because most of us have got a reasonably academic background, and it's a good place to start. So the definition of money is a store of value, a medium of exchange, and a unit of account. And so would anybody like to go about medium of exchange? Lisa, I think you said you've got an experiment to do.
I actually have audience participation because the original money was dates, so I brought dates and chocolates for everybody.
Okay, apparently I'm meant to keep talking. So dates, apparently, according to Lisa, was the medium of exchange. I think the reason that dates were used was because they had a high sugar content, and so they would last for a very long time because, sugar's a preservative. And obviously they were used, there's a single individual date, so you could couldn't really divide a date, I suppose, but you could have one like a coin. And they would last for a very long time. And so, we have dates as, are they a store of value? Well, they do store sugar. Sugar is energy, and that's kind of worth something. Are they a medium of exchange? Well, you can all kind of swap around and give dates to each person. So, 2 ticks. And are they a unit of account? I actually don't know what that means. I think, it means it's countable maybe. So yeah, sure, it's a unit of account. So tick, dates qualify as money. And so, yeah, maybe this is my first question, and I'll give it to Ash. If the Australian dollar went to currency school, what would its grade be?
Currency school, what would you give it out of?
Well,
A to E?
A passing grade, a credit, a distinction, or a high distinction.
So let's keep up with this sort of dates metaphor. The only problem with the dates is you can grow more dates, right? And that's essentially what the governments globally have been doing. So as a store of value, I think debasement on average over the last 20 years in Australia has been 7%. The annual appreciation over the last 20 years of Australian housing has been 7%. So in the sense of debasement, is it the house price going up or is it the denominator going up? And I think you'll find that a lot of asset classes correlate highly to the amount of money that the governments are printing. So, a D minus,
Store value fail.
failed. Unit of exchange, I think we could all talk about without stealing Alan's thunder. He's probably much better. Unit of exchange, I think we all believe blockchain technology is a much more efficient way to send money around the world, both in time and in cost. So that's a fail as well.
Oh, so 2 fails. It feels as difficult as you're going to get a passing grade this year for the Aussie dollar.
Well, I think it's not just the Aussie dollar, it's Western currencies, it's a fiat system. I mean, some of the stats I was looking up last night before I went out was, I think there's been over 500 fiat currencies fail in the last 400 years. And the problem with that, it's all around debasement. So the debt system has to keep on printing debt to keep the system alive. Now, I'm not saying anything, if anyone official is here, that, you know, it's going to collapse tomorrow, but the system relies on debt.
And Alan, maybe over to you. When was the when did you realise, or should we say, when did your concept of money change or take a radical turn? When, like, did you have that moment when you thought, shit, what I used to think money was is no longer money?
I think to your point, I never really considered I'd considered money, like you said, in the integrated form of all those different forms of utility. And I think the other thing that we need to talk about is network effect as it relates to that as well. So we talk about reserve currency being the US dollar. So the network effect is another utility I think that's important, which is the interoperability piece. And so for me, what blockchain really sparked was the decoupling of those things, particularly store of value from the utility or interoperability and or settlement for exchange. So once you start to pull apart the different utility and think about them differently, you start to wonder what the future of money is versus the individual utility of each of those factors versus exchange of value versus store of value versus unit of account. And so I think particularly cryptocurrencies for all of us is starting to challenge and I think even things like Bitcoin have really challenged, is this a store of value? Is it a payment? Like, we still don't know what that is, right? But it is asking those kind of questions to that. So I think I don't have a specific answer as to when, but it certainly intrigued me. I've always come to blockchain on an exchange of value basis more than a money basis. It was quite clear to me that particularly trust and the way that we transfer assets and value assets was a lot of asymmetry in all of that, and I felt like the transparency aspects and the efficiency in transferring the value would kind of change the relationship with money and assets from a settlement utility perspective, I guess, like when I can go straight asset to asset. So I've been more interested in exchange of value of assets than money, and I think of money as the settlement layer.
And Lisa, you've had an interesting journey. Like, you started life on a trading floor in an investment bank and then ended up launching a Bitcoin ETF when you were at Digital X. So, when did your perception of money, did it change? Has it evolved?
Yeah, I mean, massively. My first perception of money changed actually reading a book by Brett King called Breaking Banks when I was working in banking. And the one definition of money we haven't covered is actually access to credit. And it was really via the access to credit that my thinking really was reshaped. And then even the evolution with Bitcoin, I mean, who here has ever publicly sold a Bitcoin? Because one of my big use cases for Bitcoin was comparing it to money. But if you ever sell a Bitcoin publicly and people don't like that, it's not very cool, right? So is Bitcoin actually a medium of exchange? And the only way I can get to a yes on that is if you incorporate the access to credit and then start to look at how we can use money in these new ways of, it's not actually a new way because you can collateralize dates if you want to, and there's a thing called Sharia finance that's been done since the ancient days, which we've all studied. However, in the modern times, actually looking at the digital aspects of money and how we can reshape things like access to credit was a real game changer for me as well. And building the financial algorithms and the systems around that, because I'm so excited that Red Belly is actually on this panel, because that actually extends all the way down to real world asset tokenization. And the reason why the dates and the chocolates are there was none of you were supposed to eat your dates, by the way. You're all supposed to keep them, so run down and get another one. There you go. Delia didn't eat hers.
Delia
Thank
kept
you.
one.
I asked you to eat yours. But the whole point is that being able to attribute value and will I swap a date for a chocolate, when we start to enter that world, and that's the world that crypto is opening up of this concept of radical fungibility, is Solana worth 500 Bitcoin or is 500 Bitcoin worth one Solana token? Is a fractionalized house worth 50 Bitcoin? And then once you start thinking about how you can tokenize any asset, it actually makes your brain hurt thinking that everything is completely fungible with another. And I know that's a super geeky finance term. However, fungibility is what us finance people use to make the world go round, because we have these systems that sit at the back of everything. In a bank, it's called a credit engine. In a fund, it's called an investment process. And that's what we're doing all day, every day. And once you start to think about dates and chocolates all the way back down to that common denominator, right now I can't use that date to buy anything because you're right, some guys planted 1 million of them. But if I regulate that date and I say the only person that can grow the date is Delia because she didn't eat hers, so everybody's got to get a date from Delia because you're all out of the game because you ate your date. That's what's happening in crypto now.
And what happens to the price of dates if they all run out?
Well, we hope they go up, but dates will crash too.
It feels as if
I'm joking.
as if we might need to launch Datecoin at some point today. Something that really intrigued me about what you said was, banks are essentially credit engines. There's like the credit engine at the beginning, and I know Ash, you kind of talked about this earlier on in your opening about monetary expansion, and I just for the benefit of everybody in the audience, tell them like the difference between money and credit in a bank, in a system, if there is one, and if there isn't one, explain how money is created in a system.
Yeah, so I think just one point following on from Lisa is our view as asset managers is what risks can we negate? And the two risks that we don't, doesn't allow us to sleep at night is counterparty risk and settlement risk. And essentially, Alan and the Red Belly team, by making atomic settlement, negates all of that. And we're just a small crypto hedge fund manager, but every central bank, every pension fund, every bank has got this problem. So this is where blockchain technology will negate all of those risks.
So, sorry, you go on.
And then
I was going to say you might want to define atomic settlement, but I was going to ask the crowd how many people know what atomic settlement is.
Does anybody know what atomic settlement is?
Always called it geek. Yeah,
Okay, there
so
must be
3 people.
There's 4 people.
Of course,
okay.
you guys know.
Maybe Alan, would you like to describe atomic settlement? And you can even spruik the Red Belly Network as well. We'll allow you to do that.
The Red Belly
I feel like
Network
I
is
haven't had to. I've
amazing.
got a
I'm
great
going to
panel
spruik you. I'm so proud it's
I appreciate
Australian.
that.
Yeah.
Thanks, Lisa. No, I think the panel's been very generous. We are very excited to be launching on the 28th, so stay tuned
you get
next
that
week.
in the 28th.
There you go, buy my
Put it in
book
your diary,
soon.
everybody.
There you go, you heard it here first. So it's very exciting. It's been Vincent's been working on it for nearly 8 years in academia, and to now have it at the point where we're about to launch it with about $73 billion worth of assets is very exciting for all of us, and I think certainly Australia is punching above its weight. So great work, and very excited to be involved. In terms of unlocking atomic settlement, effectively that means that you program the swapping, if you will, that it happens simultaneously. So the updates to both sides of who owns what happens at the same time, executed in the same transaction. Is that a good enough layperson
I think
definition?
That's pretty good.
So, and Alan, you were talking earlier on about, the Red Belly Network and decentralization. It feels as if what is being captured at the moment in this kind of transition of money and actually the transition of all of the other networks is the breaking down of centralized systems and going to decentralized systems. How do you think that's going to change what we do?
You're going to be really surprised to hear this. I knew when he asked me about this question. I'm not sure that money's decentralizing. So I think, tanks and guns kind of still rule the world, and the relationship between money and power, I think, we've got to focus on that relationship to see how decentralised money can be. Do I think assets and storing of value is changing? Yes. But even if we look in the decentralised world of what we think is decentralised stablecoins, as example, they're all centralised, right? They're all backed by, unless we get to an algorithmic stablecoin that works at scale, which we haven't
I think
yet
somebody
seen.
tried that.
Several people have tried that, as I said, if and when. I'm still optimistic that that can happen, but I think the problem we've got is we've all become reliant on free payments or the utility of payments being funded by balance sheet. The reality is if we want to have, we need to get back to paying for the utility that money supplies rather than expecting payments and settlements for free because someone's making money in an adjacent way. What I'm saying there is imagine like a Uniswap immutable approach to a Bitcoin collateralized money. Now I can do that, but how does that make a return for the person staking the Bitcoin if we're not paying them something for providing that utility? So I think we're a long way from flipping that table, and that's, I think, how we get to properly decentralised money. In the interim, while we're pegged to the US dollar or to a fiat currency, the control remains centralised. And one of my favourite tweets was CZ, obviously a big advocate of decentralised money and all. He phoned Tether to freeze funds because he got scammed and then phoned the police. I'm like, okay, so it's all really cool that we're decentralised till the point where something goes wrong. And that's why I think banks, as tough as it is, they're actually operating under a social license that we grant them. And I think, I look at paradoxically how we currently have a scam task force that's focused on how, making it banks and telcos problems for us sending money elsewhere. So that social license is actually expanding an obligation on banks. I tried to get a bank check the other day and I had to answer 16 questions to protect me from myself to get a bank check. Now that's, and that's my money. I've separately, we've all had risk and compliance people, maybe not all of us, I have a couple of times had risk and compliance people freeze our accounts, right? Again, so I'm not under any illusion as to who controls my money. Now, I do think money should be a human right, and I do think we need to get to a way of doing it, but I think while we're relying on a fiat-denominated money, that's a problem. But at the same time, we know we need a stable unit of account function to be able to swap money out. So that's a complicated way of saying I think there's a great deal of utility in the short term in programmable money. I think that takes a lot of the risk that Ash talked about, but I don't think it's even close to decentralised money and the power moving back to the individual people. So I'm kind of aspirationally that way, but I think pragmatically we're a fair way from that.
Lisa, it looks like you're itching to jump in on the we're not decentralizing money. It's just a new form of centralization.
Well, so it actually makes my brain hurt. And what I was thinking about was that you might say it's not the decentralization of money. However, if it is led by the decentralization of the assets, asset by asset, because the programmability allows that conversation to happen between the money and the asset. And consider the Australian dollar is only a fractionalised version of the whole Australian economy. And if you're able to break that Australian economy down into tokenised assets and commodities, so we are a commodity currency, so the value of our currency is the sum total of our GDP, and you break that down into real world assets and they are decentralised, then actually that is what forms the decentralisation of money. And that comes from if a stable coin is then allowed to have a balance sheet that's made up of those aggregated assets as opposed to just holding the physical Aussie dollar, then there's a massive disintermediation there that is that decentralisation.
Disintermediating who?
Everybody, every financial transaction,
every financial
bank,
institution.
Yeah, every credit process that happens then becomes between the money and the asset. That's when it truly starts to really become disruptive, which happens with networks like Redbelly creating the other side of the conversation. Because right now I can tokenize an asset, but I can't really get it to talk to a stable coin. I can create a stable coin, but I can't really get it to talk to an asset. And then I think the big question becomes, what role does the RBA play in that? Or have they disintermediated, have they lost their social license to operate? Which is not a very cool thing to say, so I'll take it back. But it is Sunday, and then I'll backpedal all the way to wishing I didn't say that. But it just makes my brain hurt thinking about it.
Let's just say that we both didn't understand your statement and also don't think it's worthless and don't think it works, as Bullock said about Bitcoin. It feels as if, actually, Ash, for you, Lisa was talking about tokenization of assets and the interplay with stablecoins. Why does the Australian economy need decentralized networks and tokenizations and stablecoins?
Well, I think it's all about efficiency. I'm not going to sit here and bag the banks, but they've had a pretty good ride.
No, please. We can bag the banks, right?
Well, there's a couple of things I think worth noting. So the credit creation in the Australian economy is coming from the banks. So you put 10,000 on deposit with the banks, they can lend out 50, 60,000. So if everyone went to the banks back on one day and said, I want my money back, there isn't enough money. So that's one thing. I think tokenisation of that essentially makes it very transparent of where that money's going and how you can get it back. So I think that's really, really important. I think the other thing is, blockchain transparency. I think we're talking about money, but monetary policy also needs to be transparent, right? So we've got monetary inflation of 7%, which I alluded to. We've got goods inflation of 3 to 4, depending on which month. So essentially, you've got to beat 10% performance to stay flat. Now, that's not an easy thing to do. Any traditional fund manager, asset manager, to make 10% a year is very hard. Traditional assets won't get you anywhere near that. So that's what we think about a lot. So I think, transparency around monetary policy is also very important.
And maybe pivoting a little bit, I know we spoke about the RBA, but let's talk about some other government agencies as well. Alan, I know that ASIC is moments away from publishing additional guidance on a whole bunch of crypto blockchain projects, crypto assets, cryptocurrencies, tokens, stablecoins, regulations, licensing. Do you think it's going to radically change the industry in 2025? Or do you think it's more of the same?
Ooh, I'm going to be, again, controversial. I think Australia's missed its chance to be a leader here. I think Mr. Trump in the US, who runs the biggest economy in the world, is now talking about cryptocurrencies being built in the US being capital gains tax-free. So again, there's going to be a competition for talent and for capital. And I think, the licensing regime, if it's not supporting or aiding that, is a drag, and there'll be more jurisdictional challenges for where we deploy that talent and that capital to achieve decentralised goals, I guess. So I think Australia is not doing itself any services, I can say that, any favours. I think they should be moving faster. Even getting it wrong would be better than just doing nothing. But I don't think so much. I'm not so interested in the new definition of some of the other. We're a real-world asset company, and we're a KYC AML chain, right? So we want to comply with regulation and comply with the social license and the order that we think makes sense.
You just need regulations for that.
So that's what I'm saying. For me, the bigger issues are more around bearer instruments or the understanding of the legal definition of title as it relates to a crypto asset than regulating the offering or trading of said tokens or securities. Because in our case, securities law is, and when you talk to ASIC, they'll tell you they think they've got all the powers they need to define and understand how these things are done. But I think it's more below regulating the market, it's the legal definition of what is this thing and can I enforce its value. Those things are more important, I think, to get right, around how that works than the securities law that's required to offer and trade them. So, I'd like to see them move faster on that, and I don't think that should be controversial. That should be straightforward.
I don't think it's controversial. Is there anything with an election looming that we could apply a pressure point to our politicians to move on this one, do you think, Alan? Or do you think it's too late?
I think, like all politicians, they'll go with the wind, and I think what we have seen in the US again here is that there was a very strong crypto lobby, and I think that's been impactful, and I think they should take note of that. And I'm not saying they need to be as radical as some of those policies, but they should be thinking about how they want to position with the audiences that I think I've seen numbers like 26% of Australians own crypto assets. So this is a pretty big asset class that's interesting to a lot of people, and they should take that constituency seriously and grow it.
Yeah, I need to-
see that. Sorry, Lisa, you go.
I need to speak for the industry a little bit here too in my role of chair of DECA, because lots of our members really do need that certainty, and I passionately believe it needs to be bipartisan. And we play a role. We have to have two roles that we play. One is in listening to what the current regulation is and somewhat fitting into, there are regulations in finance to protect consumers and things like co-mingling of assets and things like that. Just not cool, don't do it. And then there's an element to both parties need to be listening to what the industry needs so that we can come together, because it's not if, it's when this happens globally. And in Australia, it's the other way around. Are we going to keep up? We don't know, and we really need that.
So I see that our time is almost up. Ash, would you like to leave us with one more thought before I wrap up? I've got some interesting things I wanted to wrap up on what everybody said, but
Yeah, so I think I've been thinking about this a bit. Blockchain is the technology for the Department of Government Efficiency. It makes people accountable. It makes people trust again. So I think it's super important. And it's probably why we're getting a little bit of pushback at the moment, because it makes people accountable, but it'll come.
Well, we all love a bit of accountability. So I'll wrap it up, maybe, reflecting on what we started with about the definition of money being a store of value, a medium of account, and a unit of exchange. I feel as if there was an additional one, I think it may have been you, Alan, that was the assertion of power. Maybe there's a fourth element of money. There's the assertion of power, both domestically and overseas, to kind of make your money real money. And so thank you very much to all of our panelists for some great thoughts today. If I just take a couple of moments, please come and see us at the CloudTech booth 33. We're going to do a little bit of a Q&A after the session now. And then I'm going to jump onto the decks and DJ at about 1 o'clock. So we're going to spin some tunes. And there's some popcorn. We can't offer you... I know there is beer at the place next to us. Sorry, Lisa, go. Oh, dates. We'll wrap up the dates.
Can I do a plug? Right now, there's a Women of DECA brunch. So all of the women here, can you please come with us? Because DECA want to be inclusive, and even the boys can come. Let's all go.
Yeah, there we go. Thank you very much, all.